We have a options expiry coming up here on the 20th, and this is a leaps expiry. This is a big one. So I think I've shown you guys before the huge difference in the open interest versus sort of like a regular options expiry, and then these leaps options, and they're like in the hundreds of thousands. So Wall Street is definitely going to be finessing price around that event as well. And I would actually make the argument that politically, they're going to use this whole debt ceiling debate as sort of the ammunition to sort of bring the market down. But in reality, it has everything to do with this leaps expiry, which of course they don't want the public to be talking about at all. It will be interesting based on Feigenbaum's. What I've noticed is if we fail at 2.618, the first sort of reactionary move is usually a check of the original breakout level. So I just sort of squiggly line through this on this screen. But I would expect that if this thing does M out and starts to break, that our first stop is going to be this high, which is really what we drew this study off of. So that's about 390 even on the ES contract. And of course, I think I've shown you guys that there is a heck of a lot of open interest on around that 390 strike. It might be interesting to go through like NASDAQ and all those kind of markets. I like using the S&P 500, of course, because it's sort of like a institutional benchmark that they use. So a lot of fund managers and stuff will use this. But notice the heaviest open interest on this screen here, and what we teach in the level 3 program is this acts as an anchor. A lot of these options positions are spread against this anchor point. And this is probably where Wall Street does not want the market to go down below, because then they'll actually have to pay out on this option. So not a big surprise. There's 390, that anchor point on the options data. I think I had it over here, right? There's 390 as the original sort of check breakout point. My hunch is, and I suppose there is the options expiry. So, interesting how I sort of tentatively drew that we might go a little bit beyond, then come springing up, then back to it, then back down. But my hunch is we're probably going to expire around then. Then following that date, I think there's going to be one more push lower. And then, so this will be sort of the latter part of January. Everybody's going to be all upset at the Republicans for, oh my God, they're going to derail the economy. And you're going to hear Biden talk about how it's all the Republicans' fault that the stock market is down, and they won't let us, prosper as a nation, and you're all going to lose your jobs. And all of a sudden the Republicans are going to be like forced into, okay, fine, we'll agree to some terms. And then you got a huge stock market rally on the other side of that sort of capitulation by the right wing. So there's my official prediction, crystal ball read, even though I suggest to you guys that it's probably not a good idea to get into the business of crystal ball reading. What I would say is, if you are a trader, as Mr. Sharktoshi had pointed out, I don't know whether we have this on the screen, but I'll just throw it on here. Yeah, you can see, to a certain degree. I mean, this is a lower time frame chart. Probably if we go a little higher time frame, you'll see it. Yeah, so you can see up top here, if now I'm looking at like an hour and a half, 2-hour chart kind of idea, you can see how MACD is progressively making lower highs here. So any kind of sneeze and this thing's going to break. And you can actually see, look how RSI is heavily in divergence here. Willie did get officially stupid there through this blow off top event. 2.618s have been hit. So really, I don't really have a problem. What do you think the odds are that the 50% rule, which is what I would use as a short objective, is going to line up with that Feigenbaum sort of check? I think probably pretty good. So the traders out there, in fact, hell, you could even go off of that low there. Yeah, there's 50% low. Not remarkable. So there is the breakout level. That would be sort of our Feigenbaum check. And there is the 50% level. And you can kind of see the trade even setting up itself right now. So actually, this is kind of cool because, you guys are always looking for trade ideas. I think that that's actually a pretty respectable trade idea. However, stop just above that high. So 428 and a quarter, maybe we'll go 428 and a half or 428 and 3/4, somewhere up in that area. Yeah, 429, what the hell. And we're going to look to take profits at the 50% level, and it's 2.78 to 1. That's actually a very respectable risk reward.